Let's talk about earnings season, the time every quarter when public companies reveal their financial results. It used to matter only to stock traders, but now it's a big deal for crypto too. The line between Wall Street and crypto is fading fast. Big investors and regular folks are moving money between stocks and digital assets like Bitcoin and Ethereum. When stocks do well, investors feel bold and often put more into crypto, chasing higher returns. But if earnings disappoint, fear takes over, and risky assets like crypto are the first to get sold. Think of earnings season as a giant economic report card. Strong results create a risk-on mood. Investors move into assets with bigger potential, including crypto. Bad news triggers risk off, people rush to safety, and crypto prices can drop sharply, even if there's no direct crypto news. So what happens on Wall Street now ripples straight into the crypto world. Understanding this link is key to making smarter moves in both markets. Earnings season isn't just for stocks anymore. It's a signal for the entire financial ecosystem. If you want to stay ahead in crypto, you need to watch what's happening in the broader market. Let's zoom in on the sectors that matter most for crypto tech and finance. Tech giants like Apple, Microsoft, and Nvidia drive innovation and investor confidence. When these companies post strong earnings, optimism spills into crypto, boosting prices. Investors who believe in tech often believe in crypto too, so good news in one sector lifts the other. For example, Nvidia's AI chip boom can spark excitement for blockchain and digital assets. The financial sector is just as important. Big banks like JP Morgan and Goldman Sachs reveal the health of the financial system. Strong bank earnings mean more capital and stability, encouraging risk-taking in crypto. But if banks show stress, rising loan defaults or recession fears, investors get nervous and pull back from speculative assets. In these moments, crypto can take a hit as liquidity dries up. The fortunes of tech and finance set the tone for the entire market, including digital assets. Watch these sectors closely. They're the pulse of both Wall Street and crypto. When they thrive, crypto often follows. When they stumble, crypto feels it too. You don't need to track every company, just the key players that move the crypto market. Semiconductor giants like Nvidia and TSMC are crucial. Their chips power everything from AI to crypto mining. Big jumps in their sales signal strong tech demand, which boosts crypto sentiment. Coinbase, the largest US crypto exchange, is another must-watch. High trading volume and user growth at Coinbase mean more activity and confidence in crypto. Companies like Tesla, which hold Bitcoin, can sway the market with a single announcement. If Tesla buys or sells Bitcoin, it sends a powerful message to investors. Tech titans like Alphabet, Microsoft, and Meta are investing in blockchain and Web3. Updates from their earnings calls validate crypto's future. Focus on these players. They're the ones shaping the crypto landscape. Their moves tell you where the market is headed. Company profits matter, but macroeconomic data is just as important. Watch inflation and interest rates. These numbers drive all markets, including crypto. When the Fed hints at rate cuts, risk assets like crypto surge. High rates, on the other hand, make investors cautious and pull money out of crypto. Crypto also has its own earnings, major network upgrades, new partnerships, and development milestones. A big Ethereum upgrade or a new Solana feature can spark a rally, just like a strong earnings report. Regulatory news is another game changer. Approval of a Bitcoin ETF or clear crypto rules can send prices soaring. Crackdowns or harsh regulations can trigger sell-offs. Track macro data, crypto project updates, and regulatory moves. They all shape the market. Staying informed on these fronts is essential for any crypto investor. So, how do you use all this? Treat earnings season as a market mood barometer. Follow key dates. Big banks report first, then semiconductor giants, then tech titans. Watch for major economic data, CPI and Fed decisions, around the same time. Track crypto-specific signals, network upgrades, project milestones, and regulatory news. Balance the big picture with crypto's unique developments. Strong earnings or positive economic news can signal a crypto rally. Disappointing results or rising inflation can warn of a downturn. Use these signals to manage risk and spot opportunities. You don't need to be an expert, just connect the dots. With this approach, you'll navigate crypto's volatility with more confidence and clarity.